This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
Okay, so I'm not feeling all that great today. I'm going to do a quick video on multiple time frames, and I want to show how you can continue to go down to the smaller time frames to improve the risk reward of a trade. So let's just go and look at this pullback to a rising 18 on CFG. So we've got an 18 day, we're pulling back to, it's above the 40, which is also rising. We get a pinch play. We've got green DI starting to show up, showing the buyers are starting to create some strength. If I click on that bar, you can see that that's actually taking place here on the hourly. So we make a move up, and a pretty strong move, and then we actually pull back to the 18 on this time frame. So we've pulled back to an 18 above the 40 on this time frame, and now we're pulling back to the 18 above the 40 on this time frame. We also have a pinch here as well. So we get a pinch play, we have another pinch play here. And so what I'm able to do with this is that I'm able to enter off of the smaller time frame and know that this time frame is now in line with this time frame. Instead of buying it on the way down, I'm buying it as this is turning up and in line with this. Now, we can go one step further here, make a move to the upside, let it move up and pull back again. And this time, let me just show you where this is taking place. So that pullback here on the 10-minute. So you make a move up and you pull back to a rising 18 on this time frame above a rising 40, pinch play. Okay. Now, ADX isn't all that great on these two time frames, but the green DI is definitely showing signs of life on the daily. To me, that's good enough. Now, what I can do with this trade is I could enter this thing at 27.55 or something like that, and use a tighter stop if I want to do that, right? I mean, if I want to play this aggressive, and if it happens at, let me just show you, it's at 10 o'clock when this is taking place. So by the end of the day, if we don't have a cushion, if we haven't moved up enough, if the stock moves up and then comes back down, and we still have a setup that hasn't been stopped out, I don't necessarily want to hold it overnight. But if we get a strong move and it's trading to the upside, and we finish the day all the way pretty high, meaning we've got some cushion between where price is right now and where our stop would be, then I'm willing to hang in there overnight and play for a bigger move. So the whole point here is just to show that these patterns continue to repeat in multiple time frames. And if you can continue to go down in a smaller time frame, you can improve the risk reward pretty dramatically. Because if I were playing this, I would use the daily for my targets, and I would use probably use the hourly risk and use this to help me with my entry. So I might get in here and then go back to this time frame and figure out what the risk would be, and then play it off these targets off this time frame. So play with this a little bit, see if you can't identify these patterns in multiple time frames, and see if you can't both improve your timing and also lower your risk.